Make money using moving average trading strategy. Hey guys, and welcome back to Tradingfyive. This is the channel that provides you with various informative content on the stock market as well as technical analysis. And so our today's video is based on moving average, which is a widely used indicator by most of the trader in the market. And in this video we will understand about moving average right from basic, like from what is moving average, what type of indicator is it, why it is used by most of the trader in the market, how to use this indicator, where to buy, where to sell, where to place stop loss, how to book the profit, everything in this video. And this video is going to be somewhat advanced technical analysis and also a special one, since this is the first time I am making a video about an indicator on my channel. So make sure you're watching this video till the end. Do not skip this video. And one more thing, if you are new to this channel or not yet subscribed to this channel, make sure you do it, so that you won't miss any upcoming videos or updates on the stock market. So let's start with the video and let us first understand what is moving average. So first thing let me tell you is that to properly understand the moving average, we must understand the concept of average. So let me tell you quickly about averaging. I am sure you must have learned this in your school life, as it is a 5th grade math. As you see, we have some numbers over here. And to find the average, we will add all the numbers divided by the total number of data. So when you do the math and all the calculation, the answer what you get is 16. And we can say that 16 is the answer to this complete set of data. This is what is called as finding the average. And this same concept can be used in stock market in technical analysis. Let me show you how. So as you can see a blue line on your screen, let us consider this as the price of the market. And here you can see these marked areas. Let us consider them as the close points. And what I mean by close point is that the price at which the market closed on a particular day, hour or minute based on the time frame you select for analysis. You understand this? It is on us that what time frame we select for analysis for maybe intraday, swing trading or positional trading. And depending on that time frame, we get these close points. And when these close points are averaged up to a certain week, certain days or certain hour, we get the moving average. And as you can see on your screen, this red color line is called as moving average. The moving average indicates the total average of the market price for the particular time unit. So this is what is called as moving average. It is a type of trend indicator. And let me tell you that there are even types in the indicator. Like for instance, I can say the trend indicator, momentum indicator, or the volume indicator. I will cover them up in some of my next videos. For now, let us just understand the moving average. So this is basically a trend indicator that moves according to trend and helps us to identify it. And the strategy that I'm going to teach you in this video completely revolves around the trend and moving average. So the step 1 of the strategy is identifying the trend using moving average. And if in case you don't know what is trend, it is basically the nature of the market that helps us identify whether the market is bullish, bearish or sideways. I have talked about the trend identification in many of my videos. You can check them out later in the description. So now let me tell you the 3 types of trend in technical analysis. First one is the uptrend, where the market is rising, the price is rising. The overall view about the market is bullish. And one method or one pattern that we use to identify the uptrend is called as higher high and higher low. Yes, when the price forms high and low that are higher than the previous high and lows, it is called as uptrend. Next one is the downtrend, where the market is falling down, where the scenario of the market is completely bearish. And the pattern we use to identify the downtrend is lower high and lower low. Next one is sideways trend, where the market is neither rising nor falling. Instead, it is captured in a range. It is like bounded in the box. A consolidation where the bullish pressure and bearish pressure is most likely equal. So these are the 3 types of trend in the market: uptrend, downtrend and sideways. Now how do you identify them using moving average? Let me tell you. When the moving average is rising, you understand, when the moving average is going up, it indicates pure uptrend. And if you try to use some logic, if you try to analyze it logically, you will understand that when the moving average is rising, it means that the close points of the stock are basically rising, which is forming a higher high and higher low pattern. That is the pattern of uptrend. Next condition is when the moving average is falling, it indicates a downtrend. Similar in this case, that when the moving average is rising, the close points of this price are falling, which forms a pattern of lower high and lower low. And thus we can see a downtrend in the pattern. And third one is when the moving average is going steadily. That is, it is not rising or falling along with the price. Then it indicates a sideways trend. And these are the important points that fulfill the step 1 of our strategy. You can quickly note them down or take a screenshot if you want. as these key points are very important in our step 2 of strategy. Now let me show you with an example. You can see this is the daily candlestick chart of Pidilite Industries, and over here you can see that the moving average is falling down, so as the price is in downtrend. And over here at the bottom, when the moving average starts to rise, the price turns into uptrend. So now you understand how to identify the price pattern, the trend, using the moving average. So let us go to the step 2 of our strategy, that is support and resistance on moving average. So first let me clear what do you mean by support and resistance. Support is a price level or price zone from where the market gets some bullish pressure and then shows some bullish movement. It is a price level from which the market bounces back. And just opposite to support is the resistance, where the price gets some bearish pressure and starts moving down. So let's understand this support using moving average. So the blue line that you can see on your screen, let us consider that as price and the red line as the moving average. Now exactly over here you can see the price comes down to the moving average and takes a support on it. Now this is the flashing point, this is the alert point on us. This is where we have to keep an eye on the stock. If the price of the stock sustains the support or shows the confirmation on the support, we will look for buying the stock. You see exactly over here when the price shows the confirmation of the support, we will buy the stock and we will place the stop loss just below the low. And if this trade goes according to us, we will make a great profit against a very small loss. And we will exit the trade either by using a target or trailing stop loss. But wait a second. Let me tell you a very important thing, a very important note about this strategy that most of the beginner trader in the market ignore. And so they keep on making loss even after following both the steps of the strategy properly. So if you don't want to incur huge losses using this strategy, listen carefully. In step 1, we will understand the view about the market, that whether the market is bullish or bearish. And in step 2, we will understand where to buy and where to sell. Now when the market is bullish, that is when the moving average and price are rising, we must look for support. Just understand this. In case of uptrend, we will look for buying the stock using support and not selling the stock using resistance. We just make it clear that when it is an uptrend, we will look for buying, and when it is a downtrend, we will look for selling. And this is what I call as going along with the trend, along with the market, not against the market, because market is always right. I hope you understand this. Now let us move to one more scenario, that is resistance on moving average. So here you can see the price is falling down, the moving average is falling down, which indicates a downtrend. And exactly over here, the price is coming down and taking a resistance over there. So now we know that the sweet spot to enter the trade is when the price accepts the resistance or the resistance is confirmed. So as you see on your screen, that's where we will sell the stock when the price has confirmed the resistance. And we will place the stop loss just above the high. So this is a short trade in the market. In previous scenario, we had taken a long trade. And in this trade, if the market goes according to your prediction, according to your analysis, you will make money. And if it doesn't, you will exit the trade with a very small loss. And over here, since the market is in downtrend, the moving average is falling, we will mostly look for selling the stock and not buying. Okay, so these are the 2 steps of this strategy. Now let me show you some live market example about this strategy. Let me just take you to the charts. Now as you can see on your screen, this is the daily chart of Nifty 50 index, and the software that I'm currently using is Tradingfyive. So in this software, if you want to apply the moving average indicator, you just have to go to this indicator section, type moving average indicator, and over here you will find it. So this is the moving average. We will click on it, and now the moving average is applied to the chart. But over here we have to change some of its settings. So we will go to its setting icon, go to inputs, and from there we will set the length as 20. And over here the length of moving average tells us how much data or how many close points it should consider. So the moving average, which considers 20 close points, which is also called as 20 moving average, is the best I can say and is used by most of the traders in the market. And after changing this setting, I will set the color of moving average as red. You can set it of any choice you can want, and then click, and here we have applied the 20-day moving average to our chart. And over here you can first see that the moving average is falling down, and so the price is in downtrend. Now we know that when the moving average is falling down, we must look for resistance to sell the stock. So over here you see the first resistance on moving average. This is exactly where we will sell the stock and place the stop loss. And after that the price again shows some of the resistance on the moving average, as you can see on your screen. And after every resistance, it has shown a very good downfall. And one more thing, let me tell you that this is also a type of resistance. The only difference is it is not exactly aligned on the moving average, and it is absolutely fine. While executing this strategy, you will find some resistance or some support that are properly aligned with the 20-day moving average, and some of them do not show proper alignment. So that is completely okay. And over here you can see that the moving average starts rising. That means there is a change in the direction of the market, a change in pattern. The downtrend has changed into uptrend. And we know that in an uptrend, we must look for supports to buy the stock. So here the price takes a support on this moving average and shows a very good bullish rally. Again, we can find one more support over here. And I think that in few days, this price might come down up till moving average. And over here, we can find another support. And let me tell you one more thing, that why placing a stop loss in this strategy is really important. Where most of the you can see this scenario where most of the traders thought that the price will take a support on the moving average. No, but instead the price broke the moving average and it completely changed the direction. So if you had taken a short trade over here, thinking that the price will take resistance on the moving average, you would incur a very huge loss. So now you understand, placing a stop loss is very important when you take a trade on basis of any strategy or setup. And this is a very basic simple strategy about moving average. There are also strategies which involves two moving average or crossover of moving average or even three moving averages. I will explain them to you in some of my next videos. So to not miss such many contents on stock market, on technical analysis, on moving averages, make sure you subscribe to this channel. And lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video as much as possible. I will see you in the next video.